Is the Bitcoin rally finally over, or are the bulls going to take control and try to push that price of Bitcoin even higher? In this video, we're going to be taking a look at the macro view, and what I mean by this is the daily charts and the weekly charts, and we're going to be talking about things that are going to take several months to play out. As I get into the video, if you find it useful or informative, then why not go ahead and hit that like button? Really do appreciate that. If you're new to the channel, consider subscribing. You can always unsubscribe later. And if you haven't yet joined us down in Discord, guys, check it out, linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? With all that said, done out of the way, let's jump right down into this thing and get into what's going on with Bitcoin. So we're going to start things off with this chart. This is basically a mixture of kind of like your trend lines, your support resistance, Elliott wave theory kind of side of things. Okay, so we're going to start here. We can see that we did push up quite nicely to 31,000 flat on this Binance chart. So Binance USDT pair, 31,000 flat. And, you know, for the most part, we're looking at this. And I'm actually just going to take these off here. We're just going to change the visibility off these days because I don't need to see these ones on the daily chart. They're all micro movements. So we'll leave those to the morning shows. But yeah, so here we can see what I kind of have been dubbing a big bear flag. And it's basically the idea that we're going up into higher highs and higher lows, which do have a tendency to break down, but it's a much larger movement than we had seen previously. Okay, so we can see that in this bear market, we have all these high highs, higher lows, and then we always break on down from them. I say always, use that loosely, that terminology, but essentially we have these and we break down from them. And in the bullish market, we have them tilting the other way, and these would be more bullish flags, right? Because we can see poles coming up, tilting down, and then they move upwards, right? So when we have lower lows and lower highs, they break upwards, and we can see those time and time again, right? But up here, we actually see these bearish flag kind of situations forming, and we can see that there's these tilting motions to the upside. So we know that this isn't exactly looking overly positive, and we've been talking about this for what seems like 6 months now. And you know, it gone and pushed up higher than expected. I was expecting around the 25k to be where we kind of top down. We kind of see a big rejection at this level, and we moved back down, but then we kind of got that next leg upwards, which again was tilting downwards. We can see here we had that bullish flag situation. We can see that tilt to the downside. So we knew that there was going to be this move upwards. As much as I didn't want that to be the case, we obviously did see that little surge there. Obviously on the channel here, we've been able to take advantage of that, specifically for our Patreon members down in Discord. You guys would know Chris was buying down at $15,000 down here. In fact, he was buying 16, 17. He was buying all of that leg to the downside there. And we're obviously talking about bear market rallies, and we'll be able to kind of go long on the market on several different altcoins. I did some fantastic spot buys with ADA and with XRP and a whole host of others as well, right? We also did some fantastic accumulation with things like AGIX, SDAO down at these lows as well. So we've taken advantage of the moves to the upside, but I think it's time that we kind of acknowledge that it's time to take advantage of shorting the market and looking at the data and kind of what's going on. We can't confirm it just yet, but we're definitely starting to see some pretty big moves in the space. Now, from an Elliott wave theory point of view, without kind of going into the substructures here, we can see that there is a requirement for a 3-wave move at least to the downside. Okay, and we can see this is talking about $26,000. This pretty much aligns to kind of where we're thinking about this morning within some of these substructures of what's going on internally within those. But ultimately, we're looking at, you know, $26,000 to $25,000. That's a pretty obvious area right in here. But we do have this 23,947 area just down here at this low, and this is basically going to be our 1.618 trigger point. Okay, so if I go ahead and remove actually I'll leave the fibs on there for a second, and I'll just show you a 1, 2, we'd come down here for a wave 3, up for a wave 4 and a wave 5. Okay, now I'll remove the fibs so you can kind of see that's kind of the scale of what we're looking for. Now, internally within this area, we are getting a pretty decent position as well, because we do see ourselves with a wave 1, 2, kind of 3 kind of playing out down here somewhere, 4, 5, and that's going to hopefully take us down into our final kind of 3rd wave movement here. And we do have our nested position over here as well. Okay, so we can see that we have 5, 3, 5 coming down, although it's still in play, and then 3, then 5. That's kind of like your worst case scenario if you're bullish on the market. If you're bullish, that's kind of your worst nightmare here. Now, if you're bearish, that's fantastic news. But obviously, if you're bullish and you're just thinking about corrections, then we're going to be talking about that kind of $26,000, $25,000, just 3-wave structure. And then, you know, we can talk about going to the moon if we want to after that. Okay, but I don't think that's the case. I think ultimately, really what we're seeing here is with the nested positions that are going on and the fact that there are a lot of them, we see 1, 2, potentially 3, 4, 5, And then we see another one right in here, 1, 2, oh, that's 3, 4, and 5. And you'll see that that then all forms into the wave 1, wave 2, wave 3, wave 4, wave 5. And we can see that there's a lot of stuff going on. This is kind of stuff that I've been talking about on the 10 o'clock video, the 10 a.m. That's 10 a.m. on UTC +1, by the way, guys, where we talk about all those micro movements. On this macro, we can barely see it, but we know that that's what's forming in the background. So it's really hard to be bullish on the market until we get confirmation. Well, it's actually hard to be bullish or bearish on the market until we get confirmation of those. We can take advantage of the shorting the market into those kind of low points, specifically around $25,000, $26,000. But for the most part, we are waiting to see whether or not we hit any of those 1.618 target ranges, because if we do, boy, oh boy, are we going to be moving into some pretty interesting situations. Now, if we complete that, okay, and we do a wave 1, wave 2, wave 3, wave 4, wave 5, we aren't going into new lower lows at that point, are we? We're just, it's a nice healthy correction. But the thing you have to bear in mind is with Elliott wave theory, if you complete a 5-wave structure like that, then that is the beginning of a move, because we topped out up here. You're going to have another 5-wave structure at some point, because you must end in 5 waves if you start with 5 waves. And again, you'd end up with that situation. Do you hit a 1.618, or do you just do a zigzag pattern and all that kind of stuff? So once you complete this structure to the downside, what's our expectation? Relief rally up, guys. Relief rally up, probably more towards that $28,000 where the resistances are. 27 to 28, actually, I'd probably say is probably the most likely area. So all of that's looking pretty good. And again, we are looking for a potential Z wave, which would be this yellow box area here, or a C wave that takes us down significantly lower. Okay, let's just talk about this one because it's not as bearish, and it is the one that I prefer to have happen. Okay, this would be my preferred low if we can get into the Z wave rather than a C wave lower, more towards kind of the $5,000 level. I don't think that's going to be happening, but we'll see how formations go. Now, if a Z wave is playing out here, our expectation is a double zigzag. I would expect a zigzag. Possibly double zigzag. I wouldn't expect anything more than that, though, to be fair. So we should just be aiming for zigzag. And if that is the case, then we'd end up with a big A, B, C structure into here, getting into this yellow range, which would be $12,500 to $19,700. A pretty healthy correction and very much needed after the run to the upside that we've seen so far. So smart money concepts is basically giving us a little bit more on the bearish look than we do see with Elliott wave theory at this point in time. Elliott wave theory has the potential to be pretty bearish all the way down towards $5,000. But none of that is confirmed. Smart money concepts tells us that we are bearish because we've got some interesting things going on. Now, we're not bearish on the daily chart that we're on right now, but on the hourly chart, we've got confirmation of a couple of different moves, a break of structures that are in bearish state of play. On this daily chart, this chart is actually in a bullish state at the moment because we had a change of character here. When we see these change of characters, it's not uncommon for the price action to move back down to equilibrium before rallying back up again. Okay, but we do understand that there's actually a bearish play here as well, and that's not necessarily just because we are expecting to come back down lower than our change of character and more to revisit the equilibrium, which would fall in line with our trend line. It's more that we've got these fair value gaps, and these fair value gaps have been stacked behind quite a bit, and I have the expectation that they are likely to get filled out. I said many months ago that we were talking about the price moving upwards in an unnatural way, DXY and manipulation and things like that, and the reason for this is we've been stacking these fair value gaps on this daily chart, which is very unusual. You don't normally do this. Normally what happens with a fair value gap, for those who do not know, and what creates a fair value gap is essentially the imbalance in the order books. Someone has come in here down at the bottom and placed a really large buy order. They put their buy order in at $19,123. But by the time their order was filled, the price actually moved up towards $19,886. So they're paying slightly more than they wanted to. So what you tend to find is when this happens and the fair value gap like this appears, because there's so much demand within that range and there's not enough selling pressure, price cools off because they stop buying. They're not going to be paying premium prices. They stop buying and price cools off back down. It goes back into this range, fills the gap, and then the buying commences. And instead, what we've seen is they bought here and they paid higher prices. They cooled off a little bit. We had this one over this side filled out. Okay, we can see that this one right here was filled out. Okay, so that got grabbed. Actually was over there. Okay, and then they start stacking them up again. Okay, this is unusual because if they were trying to buy at $20,000, why are they starting to buy again at 22,000, and why are they starting to buy again at 25,000? That's not really smart. That's not very good of smart money. It's not very smart to do things like that. So what you tend to find is when you have a market that's not manipulated or unmanipulated, you would find that you'd have one of these gaps and then price would come down and fill it, like we just saw within that example over here. In fact, there's another one there. There's one there as well. They both got filled out. Okay, and what we've actually seen is there's been a requirement to push the price up higher to create FOMO and to create pools of liquidity. And I think we're going to be taking that liquidity, or people are now taking that liquidity if they were not doing so already. In fact, we saw a lot of the wallet counts for Shark 100 Bitcoin or more wallets basically creating a lot of this pump to the upside. They were accumulating massive amounts of Bitcoin down in November and December. Price comes up and they all come out here. So as price pushed up to $30,000, they start coming out aggressively. $31,000 are coming out aggressively. So we know that the move to the upside is quite unnatural with the fair value gaps. And my expectations are that we move down. We come down lower than the change of character. We come down and fill those gaps out. Now, we could talk about a new lower low, but if we do come down to a new lower low, then we are going to change our character from this bullish state to a bearish state again. And again, it's not too hard to think that that might happen. But we'll see how the structures form out. So it's always a possibility. So we should kind of bear those things in mind. Ultimately, equilibrium falls right in line with our expectations of our 5-wave move. So I would expect a move upwards after that, more towards the kind of premium ranging and where the sellers are at the moment. We've got some buying pressure down here towards 20K. We can see that historically. And we've got the selling pressure up here at $29,000 to $30,000. So not expecting to break up higher than 31K. And we are looking for a breakdown towards equilibrium, so 22 to 23, but there's going to be some resistances on that journey, 24, 25K, for example, as we kind of move down into these ranges. And so if we come on over into our weekly chart, we can see that the previous area of demand has turned into an area of supply. Think of this maybe as support, gone resistance, however you kind of want to look at it. Supply and demand are the two key metrics really that you think you should be really focusing in on, because they are a better way of actually looking at the market than just support resistance lines, because essentially they're the same thing, but you get more of a dynamic range when you start thinking about supply ranges and demand ranges. So in here, we can see that this particular range is between 28,881 and 31,848. This essentially is where a lot of players were buying. Okay, they got trapped out over here. Price revisits, they can come out without making any losses. And now you start to see a lot of selling pressure. So what was previously demand turns to supply. People are selling here. So the obvious areas to come down to is this other area of previous supply potentially coming in, turning into a demand line. Okay, and that actually comes in right here at 24,316 to 25,251. Okay, if we were to lose that area of brief support, then we're going to have to talk about coming down significantly lower, more towards this range here at 20,892 to 21,442. So those areas, of course, fall quite nicely and in line with our expectations around equilibrium, and also in line with where we thought Elliott wave theory was also taking us, which is no coincidence that it also happens to fall in line quite nicely around that 24K on the daily 200 EMA, and on our weekly we can see that that is also on that $24,000 range as well. So we could find brief support on the 200 EMA here, which was previously also acting as a bit of resistance. So all we're really talking about here is the common things that a lot of people talk about, but in a more complex manner. Essentially what we're really saying is that we broke through the resistance, we're going to come down and test that resistance and turn it into support. That's a nice easy way, simple terms, to try to explain what's going on. It doesn't really explain what's going on, because you need to understand the supply demand metrics and kind of why these areas are reacting the way that they are, because what's the point in just saying things without the education behind it? In my opinion, I think it is critical. So when we take a look at this, we can see that there's some key areas here on the chart. We can't just move straight down in the same way that we shouldn't be moving straight up. And we should be thinking price is going to react at these key levels in some way, shape or form. And whether we choose to acknowledge that or not, it's entirely up to you. I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. I'm going to leave this video right there, guys. If you did find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe? I don't think you will regret it. Join us down in Discord, linked in the description below. And guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.